Hooty-hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets? Well, the markets are trying to push back up, right? I mean, now here's the thing. It's not going to be a straight line. Not going to be a straight line. We came down 20%. We rebounded 10%. That's a 50% retracement of the decline. So we dropped 20%, rebounded 10%. Okay, that's what's called a Fibonacci retracement. You come down 20%, rebound half of it. What usually happens is you come down a little bit more and then you take off again higher. The Fibonacci retracement level, which I like to use, is 50%. Now there's other ones, 38%, 62%. You can use different ones, but the easy one to remember always is the 50%. So that 20% drop, 10% up, I expect a little bit of a pullback towards the downside here, but then we're going to take off higher and make a new high. They're going to push this up one more time. They're going to do it with money printing. They're going to do it with emergency rate cuts. They're going to do it with a deal with China that would send us to new records overnight, right? That's what's going to happen in my take. Now, your take may be completely different, and that's okay. All right, let's get over to the real estate end. We're going to talk about real estate today. Very exciting, very exciting. You see, real estate, it's on the edge of a cliff, right? It's hanging up here and it's ready to fall over. Just needs a little bit of a push. But what we got right now going on is listings. Listings are what you list your house for sale. They go on to the MLS and they give people come and buy the house, right? Well, not so fast. It's taking longer and longer and longer to sell houses. Why is that? Because the number of listings that are available has increased 33% year over year. And that's a nationwide statistic. That's just not my area. That's a nationwide. In other words, there's 1/3 more inventory than there was just a year ago, which means it's going to take longer to get your home sold. Now, a lot of people say, but Mike, interest rates are just too high. They're at 7%, and that's way too high. That's kind of normal, right? That 2.8% that you got locked in at, that wasn't very normal. That was the Fed. They are Keynesian economists, and they like to tinker with the economy. They like to mess things up, keep those rates at zero for 14 years, grow these big, gigantic bubbles, never have a recession. Recessions are actually good things. People don't get that. If you don't have those little recessions along the way, what happens? Well, you're going to get a great big depression is what happens. So little recessions are good, but the Fed, they don't want a recession, right? They don't want that, so they kept rates at zero, did it for 14 years. We grew these big bubbles, and now we got 7%. Everybody thinks that's outrageous. That's too high. It's got to come back down so I can buy. That's not what's going to come back down. But I got good news for you. What's going to come back down is the price. The mortgages will probably actually creep up higher from here, not come back down. Yes, they're going to do emergency rate cuts. Yes, they're going to bring the short end back to zero. Bond vigilantes, they're going to push the 10-year up. It's not going to work this time. And that's why we're going to head over into the Great Depression. That's why the houses are going over the cliff. The prices are going to start to come down. Good news for a lot of people if you're, if you're looking to buy, right? But you see, right now, they're just unaffordable, though. The income ratio to how much you can afford, record high. It's completely unaffordable, unsustainable, right? But you see, everybody said, but Mike, all those corporations are out there buying the homes. I can't buy the homes. Look at the corporations. They're the ones that are dumping the homes. They're the ones that are popping this thing. But Mike, in 2008, we had that subprime crisis. That was the problem. That we don't have that now. Actually, we do. People just aren't talking about it. Shh, speak very quiet. I'm going to tell you what the new subprime is. The new subprime is the FHA loans. Do you realize since 2008, FHA loans have gone up over 1,000%. 1,000%, right? They're just giving these out like candy. What is an FHA loan? FHA loan means you come in with put 3% down. 3% down barely covers your closing costs, right? Because us greedy realtors, we take all that 3%. Actually, we take 6%, but you can come in and only put 3% down. 3% down. That's the FHA loan. Well, what's the problem? You don't have any skin in the game. You think you have skin in the game because you saved up. It's $1 million house. You saved up that 30 grand, right? And you put it all in there, but the house has already dropped 50 grand. So you're no skin in the game. You got zero skin in the game. Once you figure out you don't have any skin in the game, what happens? You stop paying the mortgage. You see, you put 30 grand down on that $1 million house. You still have a $970,000 mortgage, right? That you cannot afford. Well, what happens? What happens? You don't pay, right? These FHA loans, over 10% of them are already delinquent. 10% of the people that have an FHA loan, they're not paying. Guess who's responsible for those loans if they don't pay? Me, you, me. We're all responsible, right? Because we're the taxpayers. These are guaranteed loans by the federal government. That's what the FHA loans are. Now, why don't we kick those deadbeats out? Well, hey, here's why. Biden, on his last day in office, he signed this little, I don't know what they call it, a little law. Let's just call it a law for right now. Signed this law that says you can't foreclose on these poor deadbeats, right? Because these deadbeats, they got no money, right? So we can't foreclose on, but that law expires in 2026. My take is maybe maybe he'll get rid of that law a little bit sooner. You got to start foreclosing on these. That's the way you get back to a normal market. That's where you get price discovery. Like I say, I got that $3 million listing coming up in my area. That's a starter home. Pretty sad, right? But it should never be at that level because there is no price discovery, because we've had this bubble driven by the Federal Reserve all these years. There's no price discovery. But anyways, that's a whole nother story for another day. But what we got going right now, well, we got the corporations, right? The corporations, they want out, right? The corporations, it was great when they were getting that 0% money. They're getting all that money from the Federal Reserve for free. They didn't have to pay any interest on it. And they'd go out and they'd buy these houses and they'd rent them out and they'd get 4% or so on them. And they thought that was great because they can't get 4% anywhere else. So they went into the housing market. Well, guess what? The Federal Reserve took away the free money. Now they got to pay 7 or 8% interest, right? And that doesn't make sense to buy a house that you can rent out and get 4% back when you're paying 7 or 8% interest on the money. Doesn't make sense anymore. Well, what are they thinking? Well, they're thinking they might want to get out of these, right? Because they got, they rented them out. They got a tenant in there. Tenant's not paying, but they can't evict them, because there's that eviction moratorium still in effect in many areas. That's kind of sad. We got to get back to normal stuff here. We got to kick the people out that aren't paying. I know it's sad. There's going to be a homeless explosion, and there already is a homeless explosion. Anywhere you go, you see homeless people. Now, why? Because the prices are too high, because we're in a bubble, because people can't afford them. What's going to happen? They're going to topple over. But here's the thing. You ran out of people to buy these houses. You ran out of people. There's no people left, right? I mean, who can buy them? Nobody can afford them. And here's the other thing. You took away the first-time home buyer, right? First-time home buyer can't get in there and buy. Do you realize the first-time home buyer, when I started buying, which was back in the 80s, the average first-time home buyer age, 28 years old. Know what it is today? 40 years old, actually 39 years, but we'll just round it up to 40, right? 28 back in the 80s, 40 now. Look, I bought my first house when I was 22 years old, right? By the time I was 25, I owned 3 homes. But you see, I was young and stupid, right? Young and stupid does not match with leverage. I had a lot of leverage on these houses. I lost everything, right? Because I was levered and they had a downturn, right? They had a downturn back in 1987, I think it was, where the market dropped. I owned 3 houses. I was levered on all of them. Didn't have the income to pay for any of them. Look, I had probably fibbed a little bit on my application. Said I was going to live in each one so they'd give me the loan. They were all owner-occupied by me. I owner-occupied 3 homes at the same time. Oh, maybe I should be in jail. Maybe I am a criminal. Nobody prosecutes that stuff. Look at 1 out of 3 FHA homes right now is not owner-occupied. That's 30% fraud because FHA homes have to be owner-occupied, but we got 30% fraud out there right now. But anyways, I had leverage. I had stupidity. stupidity. And what does that do to a young guy? Makes him go bankrupt, let me tell you from experience, right? But today, the average age of the first-time home buyer is 40 years old. All right, so he's in there 10 years, 50, 60, whatever, but he can't trade up because no one can come and buy his home because the first-time home buyer is priced out of the marketplace. We got to get the first-time home buyer back in there. How do we do it? But Mike, we're going to lower rates to zero again. That's not going to work if you lower them to zero. Who comes in? The corporation come in because they got free money. Give me free money. I'll come and buy your house with that free money, right? Rent it out, get my 4% interest, right? Get my 4% return on the money that I'm paying 0%. I keep that 4%. That's what's going on. But you got people selling right now. Now, here's the thing. Let me tell you what's going on. All right, so I know a lot of wealthy people, kind of weird in the real estate business. I've dealt with them over the years. These are people that own 3, maybe 4 homes, right? And this was great, right? Well, okay, so, actually a lot of this started in the pandemic, right? Okay, they want to get out of the city, but they don't sell their house. They go buy another one. They buy another house, right? Okay, so now they keep the one in the city and they rent that out. And now they got 2 homes. Now, normally they would sell that one, but everything's so good, right? The home price is going up 20-30% a year, and they just going up and going up and going up. And that's in their portfolio. It's doing better than their stock market portfolio, doing better than their Bitcoin portfolio, doing better than the Trump coin portfolio. Look at the house was going up, going up, going up. They had a tenant in there. They were paying rent. They were cash flowing, right? They were taking that money and paying their mortgage on their other one. Well, what's happened now? The tenant's in there, but he can't afford the rent, so he's not paying. You got evictions. Houses aren't going up 20-30% a year. Most areas are coming down 5-10% a year, and that's picking up steam. Be careful. It's going to start coming down 20-30% a year. It's going to get scary for a lot of people. But right now, I know in your area, they're still going up, right? Your area is perfect. It just keeps going up forever. But most areas were already coming down. But here's what's happened. That person, the rich person, that I'm talking about that owns 3 homes, they don't want these anymore because they're going down. The tenant's not paying the money. It's a headache. It's not easy being a landlord when times get tough. When times are good, yeah, they pay you. Everything's good. You're cash flowing. It's great to be, but when things are bad, they aren't paying you. Things are breaking. Things are broken. It's a big headache for you. You just say dump them on the market. I don't care what. I just want out. I just want out. It's like a fire sale starts. And that's what's happening right now. You got these people. Yeah, it was great at 2.8% interest. But now 7% interest, and there's better places for their money than in that rental market. You see, the rental market returning about 4%, right? You can get 4% on a government bond and just sit on your butt all day at home and watch TV. You don't need to have that tenant calling you in the middle of the night telling you the toilet's broken. You don't need to hear that the plumbing's out and you got to go over and fix it. You don't need those headaches, right? And you don't need it when his rent check bounces, right? Oh, they're headaches. They're headaches. I hated it. I don't like being a landlord. Never liked being a landlord. Did it most of my life. I'm not going to do it anymore. I'm out of that business. I gave up. I said, no, somebody else do it. You can make a lot of money, but only when the market's going higher. And right now, the market's going lower. Going to be a long time before you should get into the landlording business. It's going to be a headache for you. People are going to be poor. People are not going to pay the rent. You're going to have to evict them. Look at FHA loans is the new subprime, right? I mean, because Biden signed that. We can't kick them out yet, but you get next year, man, we're going to be kicking them out. Millions of them. Yeah, they're going to be homeless. But what's that mean? Millions of homes are going to be coming onto the marketplace. 6 million homes right now are not paying their mortgage. When you like to live in your house and not pay your mortgage, 6 million people are doing that. Why? Because we can't kick them out, but eventually we can kick them out. Eventually this is going to normalize. Eventually there's going to be price discovery. Eventually we're going to see what that $3 million home in my neighborhood sells for. It shouldn't be $3 million, but I got to sell it while it's still $3 million before it comes down here, or my client's going to be very upset with me. So let's hope that there's still some buyers left out there, but they're getting scarcer and scarcer. There's demand, right? There's a lot of demand. It's like, there's a lot of demand for Lamborghinis, just nobody can afford them, right? I want a Lamborghini, but I can't afford one, but I want one. So is that demand? Not really. That's That's not real demand. Real demand comes where you got a willing buyer and a willing seller, and there's the demand, right? But right now you got this demand, but he can't come up to what the seller's asking. What has to happen? The seller has to come down to meet that demand, right? And it'll happen. It'll happen. Price discovery always happens, but we've been in this weird, bizarro world, right? I mean, it's kind of strange, right? Everything's strange because we don't know what things are supposed to cost, right? Is a dozen eggs supposed to cost $12? I don't know. Maybe it is. Maybe that's the new reality. I don't believe it though, right? I don't believe it. I don't believe houses should be $3 million for 1,600 square foot tract homes. I don't believe it. I think prices are going to come tumbling down. We'll see how this all plays out. I'm Tall Mike. You like this stuff? Give me a thumbs up. But before you go, punch the subscribe button so we can talk again real soon. Bye-bye now.